All right, so what is that average retirement age right now? Now, in America specifically, it's different than if you're in a different country. By the way, did you know in America, we're actually one of the countries that work the longest, one of the shortest retirements. Crazy. Now, I know we're not talking about being socialist and all that kind of stuff too. There's a lot of different things here and a lot of different factors. But I'm here to tell you there is a way to do it to where you can actually have a lot of your life left and retire much earlier than that average retirement age. So let's just dig in right now. All right, so what is that average retirement age? Well, here in the United States, I happen to look into that, it's actually age 62. That's the average. Not 65, like many people claim, especially the financial advising world. I don't know why we picked 65. I don't know why everybody picks 65 or whatever, but apparently that's the age we'll talk about. Now, Social Security benefits, if you want the full benefits of Social Security, not just partial benefits, you're supposed to wait till you're 67 before you start taking that money out. And so we get a lot of different things happening. Even the BlackRock CEO, even he recently came out just in 2024 and said, hey, everybody should be working into their 70s, even if it's just part-time, because really you're gonna create a drain on the system because Social Security is going bankrupt, people are living longer, inflation's kicking our butt, you're gonna run out of money, so why don't you just go ahead and keep working longer? Not exactly what we wanna do. Now, I know some of you guys would love to keep doing what you're doing. I know, like, if you're like me, you really don't wanna retire. I was able to technically retire twice before I was 39, or before I was 40. By the time I was 39. But I'll tell you, I never wanted to. Right? I like to work with passion and purpose. People have passion projects. This is mine, right? This is the thing I love doing is teaching and giving you great education, especially if it leads to you living a better life like I was able to enjoy myself. And so that's what I choose to do in my quote unquote retirement. I like to call it work optional. How do you get to the point where you have enough income coming in to pay for expenses so you work because you want to, not because you have to. And that's really what I like to focus on is really how do you become work optional? So your average retirement age, you may not give a crap about it because the truth is that you might want to keep working into your 70s or 80s. There are so many people doing that right now. I even know people that have every reason to retire today and they're friends of mine in their 70s in the real estate investing space or even just general education. Even people like Sharon Lechter, co-author Rich Dad, Poor Dad. Even she told me recently when we were having dinner, she said, honestly, Chris, I don't want to slow down. I want to just keep working. Like I've got life in me. Let's keep going. And she's in her early 70s right now. She's loving it. She just wanted to keep going and keep doing her thing, right? Keep educating, keep making an impact in the world. And if that's you, I honor you so much for doing something like that because so many people, there's so many other people are just like, in their 20s or 30s saying, I just don't want to do anything, right? And so I respect those that even in their 20s and 30s that say, no, I actually want to do something. I don't have to keep working, but I want to have the option that if I want to take off a month from work, I can. Maybe I can go more into consulting in my line of work versus having to work for an employer where I have to keep showing up to the office. I can work on my own terms, and maybe I can work remotely from wherever I am. Whatever that looks like for you, awesome, do that. Maybe go work in Korea. Maybe you can do something like that, right? Like whatever it might be, you can actually create the life of your dreams right now. But it does require you to do something different than what most people are doing because unfortunately, even though the average age is 62, sometimes it's out of requirement, sometimes it's out of force, sometimes because there's health problems, sometimes because they got laid off and they had a hard time getting a job, so they kind of just said, well, I'll try to find something part-time, but I'm really not employed. But they're retiring at 62. Now also remember, 62 is when Social Security does start. The benefits do start. You don't get the full benefits, but you can get at least most of the benefits, at least partial, of that money that's already coming to you. And I know a lot more people are worrying about that today. The trend is though, however, the average retirement age is going up. It is going longer. And what's happening is that these people are literally banking on Social Security being there. People in my demographic, those of us that are Gen Xers, we're not even sure if we're gonna have Social Security when we get there. I think it'll be around personally. I think there will be Social Security. It just won't be as, let's say, as wealthy as we thought it was. It's not gonna have as big of benefits as you think you're doing by paying into it. Really, you're kind of paying into a little Ponzi scheme and you're hoping to get something out of it, right? So that's the thing. We got our government Ponzi scheme called Social Security that we're trying to put money into, or that we're required to put money into, even as business owners. And so we've got that there. But could we do it faster? Could we actually retire much younger and earlier than what they're saying? Now, if you try to use the same old vehicles, if you're trying to use 401ks and IRAs, guess what? If you try to retire before age 59 and a half, not only will you be taxed the money like you will anyways, but you're gonna have to pay a 10% early withdrawal penalty. So if you're trying to do this younger than age really age 60, you're not going to do it. And this is why, again, people are in their 60s, the average retirement age. By the way, another interesting side note too, did you know that even though people are talking more and more online and on social media about retiring early, the whole FIRE movement, financially independent, retire early, did you know that people are actually not? There are actually less people retiring even into their 30s and 40s today than there were 20 years ago. So you know what that means? That means you guys haven't done jack squat. And why is that? That's because you're still hoping that, of course, mutual funds will do it for you. And despite the fact you have 15 years of amazing, way, way above average returns, it's still not enough. And even though I've had people tell me, well, no, I've got 4%. I can live on 4%. No, you can't. If you're trying to retire younger, that's not 4%. Did you know that 4% was debunked years ago? It's been closer to 3% if you're at retirement age in your 60s. 3% a year is what they recommend because people are living longer, especially if you already make it to your mid-60s. People are often making it into their 90s. You have about a 50-50 shot of making it to about age 92 if you're age 65 right now. That means you got to have retirement income coming in for about 30 years with market ups and downs or not paying you much at all and inflation and everything else. 3% is the max you should be pulling out. If you're younger than in your 60s, if you're like your 30s and 40s, that rule is more like 2%. Unfortunately, I kind of ticked off a friend of mine when we're at lunch because he's like so proud that by the time he was 29 years old, he had enough to live on 4% to take care of his family, his young family. I said, well, one, your family's going to get older and more expensive. Just count on it. I know because I've got 8 kids. Trust me, it gets more expensive. 2, if you want your money not to run out, you can't pull off 4%, especially when you're 29 years old. You will run out of money. It's 2%. He's like, you tell me I have to double my money? I said, yeah, that's exactly what I'm telling you. I don't know about that. I said, okay, well, what do I know? I've only been investing since you were in first grade. So good luck, good luck with that. And so, that's the thing. Everybody has their own opinions. Once the market tanks, I'm sure he'll find out, oh, maybe I'm not there anymore. And that's what's happening. Less people are retiring younger. That is a problem for me. Again, I don't think you have to retire. I just want you to get to the point where you're work optional, where again, you work because you want to, not because you have to. How do you do that? Instead of focusing on trying to compound your interest inside the mutual funds for 5 billion years, because it will take you probably that long to get to the point you say, yay, I'm free. I'm old, but I'm free. And I'm about to die next year. But instead of doing that, focus on compounding your income instead. Instead of compounding interest, compound your income. That way to do that is focus on income today. I like to buy real assets that pay me real income right now. So what do? I buy things that are real estate backed. Now, it's not always just real estate properties, for example. It's not like I'm always buying rentals. Even right now, rentals aren't paying that good of income currently. Now, there will be a day it will, but today's not that day. But they're a good growth strategy. Long-term rentals can still be a good option. But that is not necessarily the thing that's going to pay you more. One thing I've seen lately, investment-wise, that do great is lending your money. You becoming the bank. Did you realize that you can actually become the bank for other real estate investors? Now, investors, of course, can go and borrow money from the bank because banks love to lend money on real estate-backed assets, sometimes even businesses. By the way, did you notice that banks don't lend money for your stock market stuff? Yeah, they don't do it. Now, someone's going to say, they're going to try to challenge me on here and say, well, Chris, there's margin trading accounts you can do when you trade stocks and options. Yeah, there's margin accounts, but they control it. And if anything happens to those values, boom, they call their money right back. That line of credit's closed, isn't it? Banks, real banks, don't lend to put money in the mutual funds and stock market. By the way, mutual funds, I had people sign waivers as a financial advisor acknowledging they did not borrow money to put in the mutual funds because they did not want to repeat the Great Depression where people borrowed money from the banks, the market crashed, they couldn't pay the banks back, and then of course they're trying to pull money out of the bank as well. The banks had no money to pull out, and then all went belly up. That's why we saw 2/3 of banks, 65% of banks fail during the Great Depression. Banks don't want to do that anymore. So what do? They lend on things like real estate and business. And even business, they still have to have a good, solid plan there. But real estate is one that they do. But even despite that, real estate investors don't like dealing with banks. They often make them go through a lot of red tape and a lot of, just a lot of hoops to jump through. And of course, the banks set their own terms. Where an investor might say, listen, rather than me having to pay back principal and interest, I would love to be able to borrow money temporarily, do an interest-only payments to you. Heck, I'll pay a higher interest rate if I can do interest-only payments because then I can keep more of my cash flow while I'm trying to renovate this property and then sell it to make a profit. Now, they might pay you monthly or they might even just pay you at the end of the deal. Maybe it's 6 to 12 months down the road, they'll pay you all the interest on the back end. But either way, guess what? They're actually able to pay you interest. Sometimes 10, 12, or higher interest rates, higher than 12% interest that you can be making by lending your money out, by you becoming the bank. So you control those terms. You are actually the one that's giving your money to them, and you get paid the interest. And by the way, if you do it right, you can also, just like the bank, have actual lien on the property. So that means if they don't pay you back, the property is yours. Ideally, you got the property with a lot of equity, right? That's the ideal thing if you're an investor, just like a bank does. They want to make sure they have equity, have a good down payment. Well, most real estate investors expect that. They expect that you want probably at least 20%, 30% equity in a property before lending your money to them. If you do that, then of course you get paid your interest and your money's still backed by the real estate asset. So like the bank, you want to earn the interest too. You want the income coming in, don't you? Now you can even do this not just in individual properties. There are actual debt funds that invest in multiple properties or types of properties and things like that. You can do all kinds of things. There's ways even to be an equity partner in properties too. Now you only get the gains. You don't necessarily get paid that certain type of contractual payment, but you can actually earn lots of gains and have more upside too. So there's a lot of different ways to invest to create passive income right now. I had a client where she had about $650,000 in mutual funds, wondering what to do with it. And I said, well, if we actually diversify in these different investments, even if you make 10%, that's $65,000 a year. Well, she did. Some of them paid more, some paid about 10, some paid a little bit more than that. And at the end of the day, she got to the point where after about 2 years, she now had her goal of $6,000 a month or $72,000 a year coming in. She is literally financially independent, and she's still not even 60 yet. She didn't have to wait that long. I had another client where they didn't have a whole lot of cash. They had some cash in the bank, but most of their assets were trapped in their property. Now their goal was, they're about 40 years old, and they said, you know what we want to do, Chris, our kind of life vision that we have for ourselves is that we want to go abroad. We want to be expats. We want to go to like Costa Rica and homeschool our kids and do it from wherever we want in the world and essentially kind of give them that real life experience versus being trapped in a public school, which, by the way, we get this because we homeschool some of our kids too. And I said, all right, well, your biggest potential is the equity in your own home. By the way, if you're going to move out of the country, do you really need your house? No, I guess not. I'm like, yeah, you can rent, you could Airbnb, you could do whatever you want if you ever come back to the US, but you don't have to have that house. You could strip the money out of that equity, and there's about $400,000 equity, invest that into properties, and generate maybe about $3,000, $4,000 a month. And that's exactly what they did. They started generating about $3,500 a month, they eventually moved to Cabo San Lucas, moved out to Mexico, and they've been doing that ever since. I had another woman that had a couple $100,000, moved to Bali, and she's living in Bali doing the same thing. Neither of them had to wait till they were 60 or 62 or 67 years old. They all did it earlier. And that's the same thing for you as well. I've even got another client right now. He's like 80, 90% of the way there, and he's just about to turn 50 years old. He just started 5 years ago. Now results vary, there are no guarantees, you can lose your money, yada, yada. We get that, right? But the truth is that you can get your money working right now. You can legitimately retire much faster and earlier. Even my friend who had over $1 million in mutual funds saying he could live on the 4% and live on $40,000 a year. It's like, well, that same $1 million at 10% would pay him $100,000 a year. He would be there already. He would be there and legitimately and backed by real assets versus, well, I hope the market doesn't drop because all of a sudden now I don't have as much money anymore. And that's what I see happen time and time again with so many people. And by the way, we are overdue for a stock market correction, way overdue. My point is just this, guys. If you want to make sure you can get retired not just by your 60s, but even earlier and even beat the average, it requires you doing something that the average don't do. Instead of stuffing money in your dumb 401ks and IRAs that you have to wait till you're in your 60s, and that's if they even work, which most of them don't. Instead, you can do it sooner by focusing on real retirement income, using passive income as that measurement, not just accumulating a bunch of money and compounding interest. All right, if you want to see how you can retire much earlier, go to moneyripples.com. There's a passive income calculator to show you how much passive income you could create in the next 12 months. Check that out right now.